Good evening. These are the latest developments in U.S. and global news on Wednesday, January 7, 2026. In a major foreign policy and energy announcement today, President Donald Trump declared that Venezuela will transfer as much as 30 to 50 million barrels of crude oil to the United States, marking a dramatic shift in relations between Washington and Caracas in the wake of recent events in Venezuela. President Trump took to his social media platform, Truth Social, Tuesday night to reveal the unprecedented oil arrangement with Venezuela's interim authorities. According to Trump, Venezuela will turn over between 30 and 50 million barrels of high-quality, sanctioned crude oil to the United States, with the barrels to be shipped directly to U.S. docks and sold at market prices. In his statement, the president made clear that the revenue generated from these sales will be controlled by me as President of the United States of America and will be used to benefit the people of Venezuela and the United States. Trump also said he has directed U.S. Energy Secretary Chris Wright to execute the plan immediately, with oil to be transported via storage ships directly to American ports. Officials estimate that at current market prices, this oil transfer could be worth up to $2 billion to $3 billion. This announcement comes on the heels of a dramatic escalation in U.S.-Venezuela relations. Last weekend, U.S. forces launched a military operation in Venezuela that resulted in the capture of President Nicolás Maduro, who was later flown to the United States to face federal charges. Maduro and his wife, Celia Flores, pleaded not guilty in New York federal court earlier this week, drawing protests from international leaders and rights groups. Following the operation in Caracas, the interim Venezuelan authorities, now led by Vice President Delcy Rodriguez, have been under increasing pressure to cooperate with Washington, especially regarding Venezuela's vast oil reserves. Venezuela has the largest known crude oil reserves in the world, with over 300 billion barrels. However, years of international sanctions, underinvestment, corruption, and mismanagement have drastically reduced production capacity, leaving current output at only a fraction of historic levels. Traditionally, Venezuela exported a majority of its crude to China, which accounted for a significant portion of its oil sales. The new U.S. arrangement would divest some of that supply and redirect it into American markets. The announcement has stirred controversy both at home and abroad. Crude oil prices declined on global markets after Trump's comments as investors began pricing in the potential influx of Venezuelan crude into the already well-supplied oil market. U.S. benchmark West Texas Intermediate extended losses following the news. Internationally, China's foreign ministry responded by criticizing the move, saying that Venezuela's natural resources fall under its own sovereign control and condemning U.S. pressure as violating international law. Critics also questioned the legal basis for the U.S. to control Venezuelan oil and the proceeds from its sale. Some analysts describe the approach as unprecedented and warn it could set a controversial precedent in international relations. Within the United States, reactions have been divided along partisan and ideological lines. Supporters of the president argued the deal represents a bold new chapter in American energy independence, potentially reducing reliance on Middle Eastern and other foreign oil suppliers, while injecting revenue into the national economy. However, opponents, including many Democrats and legal experts, have expressed deep concern about the executive branch's apparent consolidation of power over foreign oil resources and the implications for constitutional authority and international norms. On Capitol Hill, some lawmakers have called for hearings to examine the legal framework under which the oil transfer is occurring and whether congressional approval was required. Discussions in both chambers are expected in the coming days. The Trump administration also signaled ambitions to revive Venezuela's struggling oil infrastructure, with U.S. investment. Representatives from major oil companies, including Chevron, ExxonMobil, and ConocoPhillips, are scheduled to meet at the White House later this week to discuss potential roles in rebuilding the Venezuelan energy sector. While those companies have historic ties to Venezuelan oil, with Chevron being the only major U.S. producer still operating in the country, analysts point out that restoring Venezuela's oil output to past levels will require massive capital investment and years of engineering work. Industry experts note that even if infrastructure were fully restored, production growth would likely be slow, meaning the immediate impact on global oil supplies could be limited in the near term. The U.S. move also highlights broader geopolitical tensions. By shifting Venezuelan oil away from China and potentially Russia, both key partners of the Maduro government, Washington is asserting its influence in Latin America's energy landscape. Experts warn that this could lead to heightened geopolitical friction, especially as China reacts to reduced access and considers countermeasures in trade or diplomacy. The situation underscores the strategic importance of energy resources in international power dynamics and adds a new dimension to U.S. relations with major global competitors. As of today, the White House maintains that the oil transfer agreement is a historic win for American energy policy and Venezuelan citizens alike. With global markets reacting and political debates intensifying in Washington, the true impact of this development is likely to unfold in the weeks and months ahead. For now, the world watches closely as Venezuela's oil, long a central driver of its economy, becomes a focal point of U.S. foreign policy and a test case for how far the United States is willing to go to secure energy resources and assert geopolitical influence. Stay with us for continuing coverage of this and other breaking U.S. news.
President Trump announces plan to ban large investors from buying homes. President Donald Trump announced a major new housing policy on Wednesday, January 7, 2026, saying he is moving to ban large institutional investors from purchasing single-family homes in the United States. The goal, he said, is to make housing more affordable for individual Americans and protect the American dream of home ownership. Trump wrote on his social media platform Truth Social that people live in homes, not corporations, and that corporate or Wall Street purchases of houses have made it harder for ordinary families to buy their own homes. He said his administration is taking immediate steps to implement the ban and will ask Congress to codify it into law. Trump also said he will outline further housing affordability initiatives during a speech at the World Economic Forum in Davos, Switzerland, later this month. The announcement triggered a swift reaction in the markets, with shares of major real estate investment and home leasing companies, including Blackstone, Invitation Homes, and American Homes for Rent, falling sharply after the news broke. Investors interpreted the move as a direct threat to business models that involve buying single-family homes and renting them out for profit. What Trump's plan would target. The ban is aimed specifically at large institutional investors such as private equity firms, real estate investment trusts or REITs, and major financial institutions that have acquired large numbers of single-family houses, particularly for rental purposes. Trump and his supporters argue that such firms compete with regular buyers, often offering quick all-cash deals that ordinary first-time buyers can't match. However, housing researchers and independent analysts note that institution-owned single-family homes represent a relatively small share of the total U.S. housing stock. Estimates suggest around 1 to 2% of single-family homes nationwide are owned by such investors, with higher concentrations in specific cities like Atlanta and Dallas. Context: housing affordability pressures. Housing affordability has been a growing issue in the U.S. for years. Home prices soared during the pandemic and have remained high relative to income growth, while mortgage rates climbed due to Federal Reserve tightening. Many younger buyers have found it increasingly difficult to save for down payments or qualify for affordable loans. Trump's announcement comes at a politically sensitive time, with midterm elections approaching and cost of living concerns, particularly housing, resonating among voters. By targeting Wall Street and large investors, the president is tapping into populist frustration over corporate influence and economic inequality. Criticism and practical challenges. Critics argue that Trump's investor ban may be more symbolic than substantive. Given the relatively small national share of homes owned by institutional investors, many economists say the policy alone would not significantly lower home prices or resolve the underlying housing shortage. They point out that the real driver of higher prices is the lack of new home construction and restrictive zoning in many cities, which has limited supply for years. Legal and practical questions also remain. It is unclear how the administration would define large institutional investors or enforce such a ban, and whether it would require new legislation from Congress. Some experts warn that companies might find ways to skirt the rules or restructure ownership through subsidiaries. Additionally, limiting investor activity could have unintended consequences, reducing capital available for rental markets or deterring investment in housing stock that might otherwise be maintained or upgraded. Opponents worry that reduced participation from large firms could slow construction or investment in neighborhoods that need redevelopment. Opinion: bold but limited in impact. In my view, President Trump's proposal is both politically bold but economically limited. It speaks directly to widespread frustration among Americans who feel priced out of the housing market, especially younger and first-time buyers. Targeting large investors is a clear message. Home ownership should be about families, not corporations. That resonates with many voters who believe the housing market has been distorted by institutional money and speculation. However, the effectiveness of this policy in actually reducing costs or increasing home ownership rates is questionable. Institutional investors simply do not own a large enough share of single-family homes nationally to move the needle on prices in a meaningful way. The more fundamental problems, supply shortages, rising construction costs, and restrictive zoning laws remain unaddressed. Without increasing the supply of homes and making it easier to build, any ban on investor purchases might be a symbolic gesture more than a solution. Ultimately, this proposal could be a useful part of a broader housing strategy, but on its own, it is unlikely to deliver the dramatic improvements in affordability that many Americans hope for. Policymakers should focus simultaneously on boosting construction, reforming zoning, and expanding access to financing if they genuinely want to help people buy homes rather than simply making headlines. Summary: President Trump's plan to ban institutional investors from buying single-family homes aims to tackle housing affordability, but faces legal, practical, and economic challenges and may have only limited impact unless paired with broader reforms.